This content is for educational and entertainment purposes only. It does not constitute investment advice.
Heikin Ashi almost tricked me into believing I had cracked the markets. The first time I opened a Heikin Ashi chart, I thought I'd found the cheat code to trading. Because on a Heikin Ashi chart, price looks so smooth, so predictable. Every move feels easier to read, and every trend seems crystal clear. Let's pause for a second and compare these two charts side by side. Can you see the difference? On the left, the Heikin Ashi chart looks like pure order, and on the right, regular candles are just noise and chaos. And this is what I call the magic of Heikin Ashi. It blends candle data together, filters out chop, and makes the bigger trend shine through. And when I saw this for the first time in my trading career, I thought I had the market completely figured out. And here's why. I thought that if I could just find a way to nail these Heikin Ashi color flips, I'd be on the right side of every trend all the time. But this is where my brutal realization began. Because what looks perfect on a Heikin Ashi chart often falls apart in real price action. I started trying to find the perfect algorithm to time Heikin Ashi flips. Not every single flip, but the right ones. The ones that occur right before a trend really takes off. Quick heads up before we go any further. We're going to check out some backtest results. That means these results are purely hypothetical. They don't represent real trading performance, and they are not financial advice. Always remember, real trading comes with risk. And during this search, I came across so many incredible strategies, or at least they looked incredible. Some of the backtests were so strong it started to feel like a game, not of finding one or two winners, but of choosing the best performer from a group of all-stars. But among all of these backtests, there was one strategy that stood out above the rest. And the name of this strategy was so simple, it might actually surprise you. It's called the Heikin MA strategy. And the hypothetical backtest is honestly the stuff that traders dream about. Well, I did what any new trader would do. I took the strategy live. I couldn't contain my excitement. After all those backtests, I was convinced I'd finally found it. The ultimate strategy, the last strategy I'd ever need. I was ready to ride every trend, nail every reversal, and finally trade with confidence. But that's when my dreams turned into nightmares. Almost instantly, I started losing a lot. But here's the craziest part. The backtest for my strategy said I should have been crushing it. The equity curve looked unstoppable, but my portfolio didn't corroborate that at all. In fact, it was telling me the complete opposite story. And for the first time ever, I had to take a long, hard look in the mirror and admit it. My so-called perfect strategy had failed. The ultimate system I thought would put me ahead of the markets left me feeling behind more than ever. But I couldn't just accept that my dreamed strategy had collapsed. I had to figure out why. How could the backtests look so perfect while the real trading account told such a different story? And that's when it hit me. The trade I took on August 13th. On my Heikin Ashi chart, it showed up as a clear winner. Everything looked green, and the backtest said it was a positive trade. But in my actual portfolio, that same trade ended in the red. So I looked back at it, candle by candle, tick by tick, and what I realized shook me to the core. Heikin Ashi candles don't show real prices the way they actually happen. Instead, they're an average, blending the last candle with the current one. And that smoothing makes trends look clean, but it also creates an illusion. Entries appear later than they really were. Stops look smaller than they actually are. And trades that would have been losses on real price, well, on a Heikin Ashi chart, they can show up as wins. So while my backtests looked flawless, my live trades were bleeding because the chart I was testing on wasn't the same market that my portfolio was trading in. After that discovery, I felt defeated. I had all but given up on Heikin Ashi. But But deep down, I couldn't shake the thought that there had to be a way to keep the smoothness and clarity of Heikin Ashi, build a strategy around it, and have it trade on real market prices at the same time. I refuse to believe that my story of Heikin Ashi had to end with failure, and that's where the idea for Ashi Algo was born. Now, before I show you how Ashi Algo works, just a quick heads up. Ashi Algo is a trading view indicator, and it's available through our affiliate link in the description. And just so it's clear, this is an affiliate product, so if you use our link, it helps support the channel. Ashi Algo is a Heikin Ashi based strategy designed to keep the smoothness and clarity that makes Heikin Ashi so powerful, but with one critical difference. It executes on real market prices. While the illusion of Heikin Ashi based trades are mitigated, the smoothness and readability of the charting technique remain intact. But that's enough with theory. Let me show you exactly how I use Ashi Algo in my own trading so you can see what it actually looks like in practice. So let's start with the trend model, which is my favorite because it trades exactly how I imagined my original Heikin Ashi strategy would, except this time it takes real prices into account during backtesting and execution. Now, quick disclaimer before I go any further. These setups are for educational purposes only and are not financial advice. Trading involves risk, and you should always do your own research before making any financial decisions. Now, here's how it sets up. Step 1, price needs to be above the 50-period SMA, which is obvious because any candle above the 50-period SMA is colored blue. Now, this requirement uses just a regular simple moving average on traditional candlesticks, not a Heikin Ashi based SMA. This keeps the strategy aligned with the bigger trend at play before the strategy decides to join in on that trend. Now, step 2 requires 2 consecutive green Heikin Ashi candles without lower wicks. This is a classic sign of strong bullish momentum on Heikin Ashi charts, because when a Heikin Ashi candle is green and does not have a low price, this is traditionally interpreted as strong bullishness on a Heikin Ashi chart. All of this is just due to the underlying calculation for how Heikin Ashi works on the regular candlestick chart, not Heikin Ashi. And when all of these conditions align, Ashi Algo is designed to trigger a long trade. And to help visualize step 3, check out these 2 candlesticks on my chart here. These candlesticks perfectly satisfy condition number 3 for the trend strategy of Ashi Algo. And this is because the close of this candlestick is beneath the low of the candlestick that came before it, with the close price of this red candle being down here and the low price of the previous candle being up here. If this condition is satisfied after step 1 and step 2 are met, Ashi Algo is designed to trigger a long position. And the reasoning behind waiting for this step 3 condition to be met is designed to increase the chance that Ashi Algo finds a long setup during the pullback of an already existing trend, rather than chasing the trend and potentially getting in at an unfavorable price. And finally, step 3, the strategy waits for confirmation, which is a price close beneath the previous bar's low. This just means that after 2 no-low Heikin Ashi green candles form and prices above the 50-period SMA, we're waiting for a real candlestick to close beneath the low of the candlestick before it. Alright, now we're going to take a look at a backtest of the trend model on the Bitcoin 30-minute chart. But before we go any further, I need to be absolutely clear. What you're about to see is just a hypothetical backtest. That means it's simulated, it's for educational purposes only, and it does not represent real trading performance. Backtests are useful for illustrating how rules would have triggered historically, but they are not guarantees of profit, and live trading results can be completely different. So this is not financial advice and is not proof that Ashi Algo works. Now, by taking a look at the backtest on the Bitcoin 30-minute chart, we can see a hypothetical backtest of 268 trades with a 67% simulated win rate and a 1.376 simulated profit factor. Now let's move on to the Heikin Ashi dip model, and this setup is designed to catch bullish reversals instead of chasing trends. It looks for exhaustion followed by signs of strength, and here's exactly how it works. Step 1. Heikin Ashi closes below the lower band. This signals that price might be temporarily stretched to the downside and is capable of reversing to the upside in the near future. Now step 2, a no-low green Heikin Ashi candle must form. On Heikin Ashi charts, this is interpreted as a potential shift in momentum back to the upside, and when both of these conditions are met, Ashi Algo is designed to trigger a long entry. Now the theory behind this setup is simple. When Heikin Ashi closes below the lower band, it suggests price might be overextended to the downside and could be setting up for a reversal. The confirmation comes when a green Heikin Ashi candle forms without a lower wick, which is a classic signal of potential bullish momentum beginning to build. And of course, with Ashi Algo, you can modify the profit target for both the trend model and the dip model, the stop loss for both the trend model and the dip model, along with the SMA length and the band standard deviation used to calculate the price bands for Heikin Ashi. That's Ashi Algo, my answer to the problem I discovered with Heikin Ashi based strategies, and what started as a brutal realization turned into a tool that keeps the smoothness of Heikin Ashi but executes on real market prices. Just remember, everything I've shared here today is for educational purposes only and not financial advice. Trading always involves risk, and if you'd like to try Ashi Algo for yourself, it's available as a trading view indicator through our affiliate link in the description below, and if you do use that link, it helps support the channel. Also, be sure to join the Trading IQ Discord, where we have active traders sharing their analysis each and every day, and follow us on TradingView and Twitter to stay updated on new strategies and tools. And of course, don't forget to like, comment, and subscribe for more trading content just like this. We really appreciate it. Thanks for watching, and I'll see you in the next one.